Right, in this video I'm going to show you the breakdown of why I entered to get this result, which is left or right, which is 11.5R. So yeah, let's roll the intro. Right guys, so yeah, like I said a minute ago, I'm going to show you why I entered this trade. There's a few bits up here which we'll go through. Let's get this big screen so it's a bit clearer. Hopefully I should be around the corner here somewhere. But yeah, so basically guys, this is Euro USD. I took 11.5R out of the trade. It took around 24 hours to hit, so if that was 1%, obviously 11.5% in 24 hours, which is very good. And even if it was at 0.5%, you're still going to get like, what's that, 5.75% profit, which is still good within 24 hours. And obviously the bigger account, you guys know, the bigger account, the more money that's at stake, but the more money reward wise. So it can be a very wealthy kind of business. But anyway guys, enough of me waffling. So Euro USD, firstly, we're making higher highs, higher lows. So we've got higher high, higher high, higher high, higher high, higher low, higher low, higher low, higher low. This on top, this is basically, that fits bang on there. So I do this sometimes just to give you can change it to the line chart sometimes to give yourself a bit of clarity with it. But I like to, I don't know, it's about there somewhere. I like to do that and then put it above just to make sure it's clear. A higher high breakdown. We've tapped into discount, higher high, tapped into discount, higher high, tapped into discount. Then we actually tapped a order block here, so you can see I think it's a 1 minute refined order block there. Obviously I didn't enter there. This is after, looking back after. Obviously personally I like to look back and see where it reacted from and that kind of thing, as opposed to back testing. I'm not a fan of back testing, but I like to look where stuff reacts to, as opposed to try and back test trade. Yeah, it's all a bit. But anyway, so as you can see with this, so that's where it hit the extreme, and then it actually broke the low there. And we also broke this sweep. So when I say sweep, guys, I mean this low took this high out, so that swept, and it was a wick. It was a 4-hour wick. So that was firstly, that was strong confirmation that we could be seeing a reversal. So, but before that, on a bigger time frame, let me just drop down to the daily. So here's the daily impulse. This is the daily bearish market, but we were actually in the discount, which is the higher end, it's the better price for banks to pay, if you like, to drop a sell-in or whatnot. So we were in the discount of the daily. So that's another confluence. That's confluence number one. Then we've actually tapped into this extreme. So this order block here, this grey candle there, that actually took the high there, which is in the discount area. So that is the sweep over there. That actually took down from there, and as you can see, well, in fact it's the last candle, the highest candle, which is the black candle there, and we tapped into it perfect, but I'll leave that off the screen for now because it'll get too confusing. So higher time frame discount, tick. Higher time frame order block, tick. So already we've got a lot of confluences for sells. So we've had the sweep there, so we've marked it across, and then we've dropped down to the 4-hour. And obviously not every trade is as clean as this trade, but you do get them, and they're out there every day. It's just refining your skills to find them. I keep looking at the screen instead of the camera. I'll try and look at the camera more. But anyway guys, so 4-hour. We've swept there, and we know it's a sweep because we've actually wicked and we've closed the candle below the high. So that is a sweep. In any case, personally, that is a sweep. We then broke the structure, so the last impulse that pushed the sweep, so that was the impulse there. Let me zoom in a bit because there's no point struggling. So these what, 4 candles, 5 candles, the 6th candle actually took the sweep and then sunk. We've actually broke the structure of that. So let me get rid of this one as well. That's not needed. There you go, it's a bit clearer now. And obviously we know that we tapped in to the extreme order block there. I think it was on the 1 minute, and we broke structure again from that. So we were seeing lower lows and lower highs. So that is a bear market effectively. So I did want to look for sells. I am currently in a buy, but I'll go through that quickly in a bit or on another video, because I don't want to confuse you. But yeah, so lower low, lower high, and then we keep breaking. So we've got a lower high there, lower low, we tap a little bit there. So what I was interested was, this is a 4-hour break of structure. So what I wanted, let's remove that. So what I wanted was the high that took the low. So this was the high. In fact, I've already got it on. It's this one here. Oh, 2 seconds. Why are we... Right. So as you can see, this is the high that broke the low. And we wanted to... There was on lower time frame we could see. So in fact, I'll drop down. If I'm talking too fast, guys, or whatever, just let me know. So we're on the 15 minute. Let's not look at the trade just yet. So this is the 4-hour break of structure, this line here. That's the high. Let's get the OCD. Let's get it on the actual candle. That's the high that took the low and actually tapped into a higher time frame. The car alarm or house alarm. Hopefully you can't hear that. So that was demand. But what I did notice as well, and the reason for selling, was so this demand area, which is a 4-hour demand, which I will show you now. God, it goes bloody tiny when you just click out of it. So this is this candle there that broke the high. But the reason I wanted to see what I wanted to sell was because under this we've got imbalance. From this candle to this candle here, we've got imbalance, which is this gap there. That is all imbalance. And there was obviously that we've got this nice order block below that also broke structure. So I wanted to kind of, obviously we were in a sell market and I wanted to sell into a better zone, because there's a lot of money under this wick here. There's a lot of people's stop losses and there's a lot of money there. So we were aiming for that, and I was aiming for the low on the trade. I was aiming for the low. Yes, it did actually come. I could have aimed further because, like I said, it's come into this more extreme demand area, and I could have aimed for that. But sometimes it's greed mixed with just be happy with taking profit kind of thing. So anyway, back down to the 15 minutes so it's clearer. Let's get a big screen. Don't forget to like and subscribe, guys. I like doing... Oh, that's wrong. 2 seconds. What has happened there? Right. I like doing videos for you guys. I like showing you why I entered, what went wrong, stuff like that, because it's a massive mind fuck effectively. It's trading just screws your head big time. So you've got to try and get it right. But anyway, so 4-hour breaker structure, tick. Obviously sells, tick. This was the buy to sell that actually broke the 4-hour zone. So I was looking at this. And this is the 15-minute area. Them few candles actually created enough pressure to break a 4-hour low. And obviously in a 4-hour, you've got, what, 16 candles. So there's a lot of pressure that's pushed down at that particular point. So we had that marked up, and it's in the discount area, which is another tick. So I think we've got about 6 or 7 confluences to this trade, which is a very high, what's the word I'm looking for? High chance, there's another word, high probability trade, because we've got so many confluences. Either way, and we knew that we were coming back up because we had a sweep here, which tapped, obviously we tapped into the demand area, but we knew that the demand wouldn't hold for the next part of the program, if you like. So we swept it and we come back in. We then broke structure, and then we hit demand, so we broke structure there, we tapped into demand, we kept making high highs, which meant we were coming in to a pullback, to basically a 4-hour pullback. This is a 15-minute range, which is a 4-hour pullback, and the trade was actually in a 4-hour, which we'll see in a second, is a 4-hour continuation to the downside. So yeah, high highs, high lows, and we were tapping in. We finally got into the green area, which is the discount of our demand zone. So we then drop down to a 1 minute. When I can get it, we'll get a 1 minute to try and refine things really. And so what I seen, perfect area as well. Like, I could have had a really tight stop loss if I wanted, but you've always got the risk of it taking the high out. So before this massive impulse that broke, so this is the 4-hour, this line here is the 4-hour break of structure. But what broke that break of structure? Effectively, it was this whole cluster of what, 1, 2, 3, about 10 minutes worth of manipulation before it dropped. That to me was the perfect kind of area to look for. Obviously there's little bits of imbalance above, above there, a little bit there, but it's kind of because we've refined that whole area as just the 1 minute before the massive impulse. I was very interested in that. So I move across. So basically, I just don't want this to move anything. So yeah, we had that area marked up, and yeah, we basically, as soon as it tapped into it, oh bloody hell, I keep moving, so I ought to lock stuff, ain't I? There you go, let's lock it, because I will probably move it again by mistake. So here we go, guys. So we tapped in to this little area is our refined 1 minute order block, and we've got a lot of confluences saying that it should sell from this, but we like to cover ourselves a bit just in case it takes the high of the order block out for a bit of liquidity purposes. So it sinks, it wicks out of it, our next candle then wicks into it, and we drop an entry in straight away. And our entry, yeah, it was 5 pips stop loss. We could have got away with a 2.5 pip, we could have even got away with a 2 pip, but with the spread and everything, don't be too greedy. So we had a 5 pip stop loss with it was 576. So I think it was a little lower than that actually, 5.5 or what? No, hang on, no, tell a lie. Yeah, it was 575, which is the 11.5 R. And yeah, so I was in, and then to add confluences later on, so we could have gone for more entries, this was the break of structure here, which should be marked up, which it is marked up now. So you could have had another entry. The candle that actually broke that structure, which is the 15-minute high, was this candle here. That actually was the final candle before we took that, and look at that. In fact, within 50% of that area. So you could have, and myself as well, I could have as well, but what time was it? Yeah, 1:30. To be fair, I think I was out. I was on my motorbike for a bit. So you could have had another entry there. I mean, you can have stop losses really tight, but like this one, I probably would have done a 3 pip stop loss, and then obviously, yeah, that makes your risk to reward really good. But we'll get rid of that one because I didn't take it. I did take this big one though, and my aim was purely the low, to just take the low out, and lo and behold, we took the low and we kept going, and we tapped into the further area demand where I was assuming it might do, but I didn't want to risk too much within reason, so I just aimed for the low, take the low out, don't be greedy, take what money you can in away from the market without being overly greedy. But yeah, so break of structure there, we could have had another entry there, break of structure here, which I'll line on for you guys so a little bit clearer. Hopefully this video is not too long for you as well. I'm just trying just trying to give you a lot of confluences with it. So that broke structure. This was a nice supply area that actually broke the structure. Yeah, so we moved that across, and then we actually tapped into it. Then we broke the structure again, and then we came back into. So we tapped into the supply area there. Sorry, I was zoned out. Then I don't know what happened. We tapped into the supply areas there. Then we dropped down. We broke structure, and then you could have got in at the 50% mark. A third entry, like, I mean, I'm almost teaching myself doing these videos, because as I'm watching them, obviously I've marked it from previous, but I'm looking and thinking, why didn't I get in myself? So 5 pip stop loss, put it at the 50. You've covered just in case it sweeps the high, and then you aim for the low again. So that would have given you another 5% or whatnot, 5R. So you could have got 5 there, 12 from the other, plus the 11.5R I got. 38. No, my maths is terrible today. 28R I think it works out as, but I just took 11.5, and yeah, it sunk. We got another break of structure here, which I'm actually looking at. Yeah, that's where I'm buying into. So we got a break of structure here. But yeah, so that is that trade, and I'll show you the other bits in a minute. But so 15 minute, let's just go over it quickly. So let's summarize. Where's my writing gone? Right, here we go, guys. Let's move this down. Hopefully that's not the doorbell about to ring. Right, so yeah, higher time frame discount, tick, showed you earlier. Higher time frame order block, showed you earlier. The medium time frame sweep, which is the 4-hour sweep, which my WhatsApp's going mental at the minute. The boys, the trading boys. Right, 4-hour sweep, tick. Medium time frame chock, there, tick. That has happened. We have actually got a medium time frame break of structure as well, which I've not put in that, which is another confluence for the downside. Imbalance, we've got imbalance, tick. Entry point is in the discount area of the 4-hour break here. Perfect. Another tick. Target effectively was the low, to take the low out, so that's tick. But you could have gone further for this one, and it did. So in future I might leave it and just take like more partials off. But so there's 7 ticks there. Plus we had the girls. It's the dogs barking. Yeah. So yeah, 7 to 8 confluences, I think, and as you can see, it's sunk. I'm now actually in buys, and the reason I've bought, I'll just go over this quickly. I won't go over it too much, but we've tapped into the, we've swept the low. So we tapped into the more extreme demand area. We then swept to the low. We then broke the structure, and we've come back. I did enter there, but then after I thought, hence the line with the dollar signs or the pound signs, I thought maybe we're going to use this low as the inducement, and I actually got took out on that. So go on the 1 minute. This is a trade. I'm actually live now, guys, and obviously we've got a lot of trend lines being formed, which means a lot of money to be took effectively. Oh, perfect. So see, this hadn't done it by the time I started the video. So yeah, so this first one I got took out. I entered too early. It showed me a few breaks of structure, but it didn't actually take the 15 out. But we tapped further. We took the low. We tapped into the very extreme, and I entered here because it was an impulse down, and I'm ready for an impulse up. We created inducement there by the looks of it, and we've actually took that sweep. So effectively, this should. I mean, I'm saying should. The market will do what it wants, but this should shoot up, and I've got an 8R target on this. So if you follow my Instagram, which it will be on here somewhere, at the rule of 7, you'll see on my story if this actually hits TP or what happens with it later on. This is 10 o'clock, 8 minutes past 10 on the 18th of May, so we'll see what happens. But yeah, so hopefully that's clear enough for you guys. Hopefully I've not waffled on. It's been quite a long video, but there's a lot of there's a lot of context and a lot of stuff that you can use from this video for your own trading, and obviously points to look out for and whatnot. But yeah, so yeah, thanks for watching, and I'll catch you on the next one.